Hey guys, this is the roaming CPA. So I wanted to talk about private equity because I get a lot of questions about this space and people learn about it and they think and then they get access to it and they just go ham and it's like I want to talk about how to be a little go in with some expectations of what to expect. First and foremost, like time horizon wise, right? With most private equity deals, you need to be honest, you need to be people get so fixated on a liquidation event once they get in. If you're worried about liquidation event, then stick with public market stocks, right? That's why they're there. There's not that much upside because most of the upside happens in the private equity space, right? Those guys who get in the first and second, third rounds, they usually have a better chance of getting a higher ROI than you do because they have a longer time horizon. So they usually hold even while it's in public markets, right? And if you can hold for very long periods of time and you get in at good valuations, man, the deals are great. It's just there's a lot of finaglery and a lot of criminality that happens in private markets, so you need to be aware. What I noticed is most people just tell you one white lie. That's it. That's all it takes for you to buy in and for you to be fooled. So you need to be cautious. You need to spend at least 1 to 2 years understanding. You need to at least talk to 20 to 30 PE guys and see the patterns that they do. They all have the same sales pitch. And once you realize who is BSing you and who is not BSing you, what you'll notice is 28 guys are going to be having the same pitch. If those 28 guys have the same pitch, that means they're all lying to you. There's going to be 2 guys out of the 28 guys who are not BSing you, and they're real, and you'll notice it once you talk to 30 guys, okay? And then you'll be like, okay, these are the 2 guys I need to talk to. All the other 28 are going to pitch it as if this is a very unique opportunity that we're only giving access to you because you're so special. No, they're just that desperate. Okay, so you need to understand that and understand you need to properly allocate your portfolio based off of your needs. Okay, you shouldn't have too much of your portfolio allocated to private equity. At max, you should have a 5% allocation. If you have 5%, it's not going to really affect you on a day-to-day basis. But then over your lifetime, it could have a massive impact in the growth of your wealth if you have that 5% allocation. Day-to-day, a 5% decrease of your liquidity is not really going to change your life. Okay? So do not over allocate, but have some allocation. Okay? That's how I view it personally for myself. So with that being said, okay, how I position my portfolio is I have a certain portion of my whatever I need over 18 to 24 months, I have it in cash. Okay, so you need to have a cash position. And then after you have your cash position built up, then you need to have a 2 to 5 year liquidity event. So 2 to 5 years, what does that look like, right? So cash, let's first go to cash. Cash can be either cash in the bank. If you want some kind of rate of return, you can talk to your banker about opening up a savings account. Most savings accounts are going to be 4.5% to 5%. And if you want a higher yield to that, then you can buy 4-week treasury bills. Right now, 4-week treasury are giving you 5.37. And if you're not trusting the FDIC insurance and everything like that, I mean, if you don't trust that or the banking system, then you can trust the government in that way. And if you don't trust the government, then the next alternative is buying gold and silver. Okay, so I have a certain portion that's sat at a pretty good bank. If you need to figure out a good bank for yourself, what I do is I go to deposit accounts. So here they do reviews of banks, right? So the bank, I was banking at Wells Fargo, all right? Just look at this. Oh my. Come on, dude. Maybe let's go. Let's do Capital One. Oh, Capital One. Look at them. Okay, see, they're doing pretty good. This Capital One bank. I'm kind of surprised they have an A plus for wow. Bank that I use. I did not realize Capital One was that good. I do not know why this is having an issue. See deposit accounts. Here we go. See, I use 8, and then they have. Oh man, deposit growths have decreased, and then their capitalization's A, so they need more deposits. They're not doing so well, but they still have an A, which is surprising. But you can go here, and then you can see which ones. You see the failure rates here, number of banks failures. So you can go here, and then you can look at the riskiest banks, and then you can go to healthiest banks in your state. It's quite helpful. With over $1 billion in assets. And then you can just pick a bank here that you feel comfortable with. Like I live in Texas, right? So I just use one of these banks. I did not realize Veritex is that good. So yeah, so that's how you go about it. But yeah, that's that cash position, right? So then you go into gold and silver if you need it. Gold, silver, and crypto, right? That 3 to 5 year range, that's where I do gold and silver. That gives you the liquidity you need. And then longer term, I just do private equity. I've been looking into middle interest, and that could be another video, but private equity is where I keep long-term stuff. So with that being said, I've looked at a different couple things. Whenever you're looking at like private equity, what you have to do is like look at their fees. Are they going to have a carried interest? Like, are they going to like how much of your capital is going to be used for their overhead? Some people have a 10% allocation, so and they have minimums. So like, let's say somebody has $100,000 minimum. 10,000 of that is going to be used for their own overhead. They're going to just eat it up immediately. Okay. And then they're going to apply a 2% management fee on top to just manage your capital that you have up there. And then after that, they do a 70-30 split of like the profits. Okay. So in that situation, I would just like honestly walk away at this point in my life. I'm like, that's just too much risk, right? And I don't know what you're going to do with the money. So I realized I just don't, like, if they're not going to give me the shares of the stock or like just basic stock, I just walk away from those PE guys. And $100,000 minimums are pretty high, okay? So if you're somebody who's like a little guy who's not have that much cash, but they're wanting to get into the space, like I found this link to be quite a good catch. The only thing I'm trying to get grasp with them is like, so if you see, let me give you an example with this valuation of SpaceX, right? Let me see if they get, oh, they don't actually. So what happens is you sign up for an LLC, okay? And that LLC will own the shares of the said company. These guys give you the documentation of ownership of that LLC, but you don't actually know if you own the shares in the LLC. They could just be giving you a blank LLC saying that the SpaceX stock is in there, but you have no way of verifying that. So I'm still digging with them to determine whether it's there, right? But like you can see right here, I bought some, and then you can actually sell it. Let's see if we can sell it. 28. Oh, let's see. Let's say 1, 2. Oh. So I gotta sell 27. Oh, so then you see they sell it. I bought it at 184. These shares right here, but now they'll sell it back. They'll sell it at a loss at 135. And they'll charge me a transaction fee. But then I have a minimum sell order of this, so then I'll have a loss. Right? But they give you a lot more liquidity. I've been testing it out, honestly, for myself. But I find this a little bit better and you don't have to put so much. There's a $5,000 minimum, right? So you can own a bunch of different companies, and let's say like let's say you have $50,000, right? You can buy like 10 of these, and if one of them works and they do 100x or like even 10x, you basically covered your capital and you were able to expose yourself to private equity. This is not financial advice, and I'm not like, this is what I'm doing personally, and I wanted to share this. If you do this, great. If you don't, I don't really care, to be honest. I'm just sharing my thoughts. So you can live with that. But with that being said, like I bought at 184 just to get entertained, but right now it's at 168. So prices decrease here and then they go up. I've noticed people like Kraken, right? I was talking to some people, they bought it at $78 a share. Now Link2 is selling it at 19. So you could realize a loss, right? These guys go and sell at different prices, and you just need to be in this like space for like a year or two and see how the prices offset, right? So how I look at it now, and this is just my thing, right? So they're doing $19 a share. They're saying that the implied valuation is 5.4 billion. And the last round, which was 4 years ago, was higher valuation than what these guys are selling at. Okay, at 78, it was really high. They were doing at $20 billion valuation, but now they're doing it at below the last round of valuation. So like this is trading at like a marginal discount now. Kraken, like, it's a U.S. company. Like I've been using them and they're pretty good. So this, I feel like I've been waiting. They usually give these deals where they do like $2,500 of each stock. Like recently they did XAI and SpaceX. You could like buy $2,500 at a cheap rate for both stock. That was a great deal. I hope they do that again, and then I can buy it. I just missed it. And I'm just trying to get confirmation about the shares, and then I'll dip my feet even more into this. The Ripple stuff, right? I don't know if they'll let me sell the Ripple. So you see right here, I think I bought at this valuation. Like you see, they had 15, now they're at 11, and they're selling it at an implied valuation of 7.5. So it's like less than, and they just did a buyback at 11.3 billion. So you're actually buying it at a discount relative to what Ripple has been buying from their shareholders, right? So you want to look at this, let's look at SpaceX. Like I bought at 184 because like I just think that SpaceX is going to do good. But like I when I bought it, like I knew like, hey dude, like this is going to take a long time to recover from, because their last round they did 180 billion at 180 billion, and then right now like at $168 a share there, it's like 300. I think I bought at a $400 billion valuation. I bought double valuation. So like, I think I have to dollar cost average into this, to be honest. So, and if you see right here, like in 2022, their series N. So like, look at how many rounds they've had. They have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 13, 14, 15. So this was the 15th round, dude. Okay, so like they've been around, like they're not going anywhere. And for me, right, Elon has been like this, like if you like think about if it does like a Tesla thing, right? Let me show you Tesla's chart. Let's like pull that sucker up. Like I was looking at this sucker. Like look at it. If you were just like patient, right? And you like just held this thing for dear life, right? From 2010, okay, to 2020 to 2021. 11 years. Remember I told you 20-year time horizon. Dude, you made 400 times your money. So like if you had like $5,000 in this sucker, let's pull up let's pull up some more. So let's pull this sucker up. So like if you had like, if you had $5,000. Oh, sorry, let me zoom in. for those that are not 5,000 times, let's just say 200x for the sake of this. Okay, that's $1 million off your $5,000 for you just to sit there and not do anything. You just have to wait. Like, I mean, if 3 to 5% of your portfolio is doing this, and you just sit there and wait and like watch paint dry, that's not so bad. So that's how I think about it. Is like, I don't think you should go all in one specific one. I think you need to do your research and figure out like, hey, like, do these valuations make sense? Am I okay with this, right? Like this Stripe one, like I really like Stripe as a company. I use Stripe, but man, this valuation is like crazy. I mean, like look at it. Like in the last round, they did 50 billion valuation. These dudes are selling at a 122. You're like, okay, how does Link2 make their money? They're telling you how they make their money. Okay, they're buying this thing at a $50 billion valuation. Okay, and then they're selling it to you at 122 billion. So what does that mean? Like in basic layman terms, that means that like if you take 122, what is it? You take 50 divided by 122, that's like 41% times 49.27. That means they're buying this stock at $20. Okay, and they're selling to you for basically 50. Okay, 49, like a dollar, like we're rounding up to the next dollar. Okay, so they're marking it up. Okay, that's why they don't charge you a management fee. Like I've bought some stuff with them for the past couple of years, like this Ripple shares, and they don't charge me any other fees. Whatever you buy, whatever price you buy, you just sit there and you wait. You just have to hope that the shares are inside that little special purpose vehicle LLC that you have. Other than that, that's it. So I think that they're going to decrease this. I might buy this if it's like $25 share. So you just have to wait and just like keep an eye on it. Let's look at like Turo. People use Turo. So they're doing it at 3.9 billion. All right. Yeah, see, that's just insanity. You gotta be crazy to buy this thing. I mean, like, look, the last round was 1.2 billion. And they're valuing this thing at 3.9 billion. That's insane. That's like cuckoo for Cocoa Puffs. That means like, what is that? So they did 1.2 divided by 3.9. That's 30%, 31%. And then times 31.97. That means the last round they sold it at $9.83. They're selling it to you for $31.97. I don't know if I could stomach that. I couldn't sleep at night knowing I bought that. The reason why I'm going through this is because I went to this like XRP conference in Las Vegas, and I met people like that put in like $500,000 to $600,000 into this platform, like for just one stock. And I'm like, holy crap, do you know what you own? And they're like, no, we blindly follow like YouTubers who are advising us to do this. And I'm like, holy shit, dude, like look into this, like look into what you own, like look at whether you have shares, like look at, are you buying it at the right price on here, right? Like I think there are deals here. Like I'll give an example, right? Like I saw like Coinbase on here, right? For $40 a share back in 2020, right? So now let's pull up Coinbase. Let's pull up Coinbase right here. Okay. So if you had Coinbase, right? Okay, so like look at this. If you had Coinbase, like let's say you didn't get, like it took you some time to get your stock from them, right? So ask them, like, how do I get my stock off of here? Like how long do I have to wait after the IPO to get my stock? These are good questions to ask them. Like, so if they say, hey, you have a window hold period of like 1 year after the IPO, then man, that kind of sucks, right? Like, so they bought, like, let me give you an example, right? So like they this was right at the peak of the bull run. Okay, they did an IPO, and if you had shares, like look at this, like you had $40 and you just sold it all. I mean, like I'm talking about less than a year. Like Link2 had it, right? So then, like I saw it on July of 2020. So you see they IPO'd in 2021. Okay, so like in less than a year, you could buy shares for $40 on 2020, summer 2020. Link2 was just there. That's why I've been so enamored by this whole prop thing. And you basically made 8.8x your money, right? So if you had, like at the time, they had a $10,000 minimum. So if you had $10,000, you made $88,000 in less than a year. That's great return. I don't know that many places that you can do that other than crypto. So then they did great, but then you saw this thing came all. If you had a 1 year hold period, like let's say this was you got into this at April, right? And then you had to wait a whole year, right? So like look at April. You were hitting just right at the bottom. You had a 1 year window, that thing was just collapsing on you, right? So you were like quite literally right back. You were $4, okay? And then you even came down. You could have bought this sucker at 33 again, and then just rode this wave all the way back up. Now it's at 245. So there is space for this, right? I'm not saying that there's availability. Like I see Kraken doing something like similar to this, right? At $19, like why can't it be a Coinbase, right? Like so this is where I'm seeing this space go, right? With certain exchanges. Only certain exchanges are going to survive this, but like Coinbase clearly has some kind of traction here, right? So you could have even bought in public markets again and rode this wave. So you're like, Zishan, this is not my cup of tea. Okay, that's fine, but just keep an eye on these things, right? Like this whole space is changing, like this whole crypto and tech space. And then if you find something that is like a good deal, maybe look into it. So yeah, like that's why I'm into this Link2, right? So let's go back. So there's a couple other ones. Let's see what other people. I don't know. Let me see. I'm looking to see if. Yeah, let's look at Acorn. A lot of people like Acorn. Okay, so they had a $1.8 billion valuation. So they're selling it at last post money. So this is like fair market. It's not at a discount. So I would not do that one. Alto, like look at a drug company. So they're at a $1 billion valuation. Okay, what was their last round? 800 million. So this is above their last round. Do you really want to get into this space? Right? So this is what you have to ask yourself. So do your research, ask the questions, figure this all out, and then go like be a little bit methodical about what you know and what you're comfortable with. And understand like there's a lot of liquidity. You have a lot of third-party risk because you really don't know whether you own these shares unless you ask for proof, right? You could be sitting here 8 years thinking that you own this crap. Only whenever the IPO happens, they're like, oh yeah, we don't have the shares. What are you going to do then? That's going to be very difficult to think. That's why they're not my sponsor. I'm just telling you the truth. I won't get paid by any of these guys. Okay, so like just telling you my thoughts. There's a lot of other companies like this, but their minimums are really high, and then they have management fees. I would not get involved with those people. Like you have to be very methodical who you do business in private equity markets. Even these guys, there's some deals here, but not all of them are great. I think 80% are overvalued, but you should start looking at it and keeping an open mind. Because the biggest thing you need to get to is how to be an accredited investor. Okay? So we're on the SEC website. There's like basically 3 ways to do it. Either you have like $1 million net worth, excluding primary residence, right? Individually or with a spouse. Somebody who owns generates like $200,000 income, like adjusted gross income on your tax return. And if you're married, it's $300,000 for the past 2 years. And you expect to like get that much money in the current year. Like me as a professional, like I try to stay away from verifying clients unless like I personally know them quite well. Like I really like I have to know you really well to do that. There's only a handful of clients I write these letters for. Or you can get like one of these investment professionals. Like go work at a Fidelity or a Merrill Lynch and get like a Series 65 or 82, right? Or a Series 7. Ideally Series 7. Like I think everyone needs to get this. Like if you want to get into finance, like it's really good for you to have this. I don't personally have this, but I think it's a good license to have. So definitely do that and then get into the space. Like I think just learning about it is really important. That's where I'm sitting with this. So definitely do this, but do your research at like how to do it, right? I'm just telling you, just opening your mind. I wish when I was like younger and somebody told me this and like explained this in this way, I would go dig and find what I would be interested in. I definitely do not recommend you going and just going ham right now and buying whatever I talked about on this episode, but do the research. Start like opening your mind to ideas of like what should I get into. Go to different private equity conferences to see what is out there. Like one thing I went to, like, let me show you. So like in the retirement space, you can go conference. They have like these. So they had like a retirement thing, and then they talk about different. Let's see if they have a. Maybe do the webinar, right? Learn about real estate in this space, right? Like we can talk about these things later, but like they have different videos. Oh, here's a summit. Let's see what one's there. Oh, so they had one April 19th in Dallas, Texas. I didn't go. So, but yeah, like you can like learn about different things. You see, they have like different ones here. You can go and talk about each one of these ones. I can tell you my own opinion about them all. I would not stick my finger in any of them, to be like point blank honest with you. I think they're all scams. But I think you need to go expose yourself to all these con artists so you get more comfortable with like how to navigate this space. More criminals you talk to, the more comfortable you're going to be navigating who's real and who's fake. How I do, right? Like in money, there are just so many people trying to hustle you, and you need to be very cognizant about who you're doing business with. Try to go to more. So I go to this Quest Trust. They have a lot of events like in around Texas. I went to their like, let's see, they have like local events. I learned something new. Like I meet a new criminal and everything, and then I just talk to them. So like let's see, like I live in Dallas, right? So then you can just go in Dallas. Okay, so they don't have anything. Houston, special events. Okay, they're basically like anti-events right now. Looks like filter. I think they're just doing webinars. But then you can just sit at home and watch it, right? But definitely look into this private equity, look at different alternatives, right? And see what you can do. If you don't have a accredited investor, then get it. Like work towards that. We can talk about how to do that next time. How to work towards being an accredited investor. It's a process and it's painful and it's not easy. Like you have to sacrifice a lot to be an accredited investor. When I first heard about it, it made me a little depressed, to be honest, because when I heard about being an accredited investor, I was probably, it was 5 years ago. And I just thought there was no way I can do it. And then last year I became an accredited investor after 4 years. So, like, it just took time, right? and having in your mind. And it came with sacrifices. It came with me not owning a home. It came in the fact that I had to deal with increasing rent and moving, like, because each landlord was increasing my rent. But the level of financial freedom you have to be an accredited investor, the sacrifices you make, it changes you as a person. And I think over the long term, if you have a long enough time horizon, then you'll get there. I mean, to be rich, you have to have a 10-year time horizon. To be wealthy, you have to have around a 150-year time horizon, and understand that, like, it is a multi-person marathon, a multi-generational marathon. And you realize that one generation will have to build the foundation, one will build the walls, another one will build the roof, another one will add the furniture, and then the fifth generation gets to live in it. And 4 generations don't get to live in it because there's no furniture. And when you realize that, you say, hey, look, I'm doing this for my family. I want my family to go in a different direction. So it comes with sacrifices. Not everyone can do those sacrifices. So just be cognizant of that. Okay, this episode went a lot longer than I anticipated, but I wanted to create it. Okay, I'll talk to you tomorrow. Have a good one. Bye.